everybody, welcome back to my YouTube channel. My name is Derek. Today we're going to be talking about financial literacy and how most people aren't taught how to make money, or how to earn a lot of money, or how to invest money, or how to save money. You don't really get this 101 on how to become wealthy, how to build wealth, how to save. You don't get a lot on financial literacy. You even see this to this day. You're seeing people who have six-figure jobs and they're living paycheck to paycheck. In some cases, that could be due to their location or area, but a lot of times too, it could be that they're just overspending and they don't know how to manage their money. And I'm here to tell you that it's all about financial literacy. You just got to learn what you're doing and how you're spending your money and how you're investing and saving your money. Because even with myself, I've been in this situation and I have seen the downfall of not properly knowing where your money's going. The first thing we want to jump into is earned income and active income. Earned income and active income are the exact same thing, because basically earned and active income is the income where you have to go to work every single day and you earn money by being there and doing the job, working 40 hours a week or wherever how many hours you work. The pro of this job is a lot of times people feel like it's a lot more stable with this type of income. This is how we all start off. But the downside is a lot of times we don't make as much money, and also in this time frame more than ever, since we have seen even with the Great Resignation, is that people are not getting paid what they used to get paid. People are not getting paid as much for their skill. In my case, I'm pretty thankful because I work in IT. There's a high demand, so my salary is good. But if I was in another field, I definitely could see why some people would be like, oh no, I'm not getting paid well. I do not want to be doing this job, and I hate it. So here's the thing. If you don't like earned income or active income, the next thing you want to be looking at is profit income. Profit income is better because you're selling good for more than what the actual product is. So example would be is if I have a t-shirt business and I get that shirt, I put some logo or design on it. You guys like my shirt or like my style. I get that shirt for $9, but I sell it for $20. I make a $15 increase in money. That is what we call profit income. You're making money while you sleep. You are an entrepreneur. People are purchasing while you are resting and sleeping, and your bank account is being filled up. The beauty of these type of incomes is this is just going to make you wealthy in the long run. You're not going to have to worry about when you lose your job or when there's the next layoff or anything. There's nothing wrong with working a 9 to 5, but you need to find out other ways you can make money and you can build your business and build your wealth. And that's the important thing about this. This is the reason why people like profit income. And again, profit income is the same as passive income. It's basically just being an entrepreneur. You have to do a lot of the hard work up front, but over time, you start to build a lot of money because you're putting in time and you're putting in effort, and eventually that money starts to make money while you're asleep. The next thing that you want to look at is dividend income. This is my favorite one, I will admit, because right now I'm investing in a bunch of different real estate dividends income. I'm investing in a bunch of dividend income for technical companies, some that are even startup. The startup companies tend to have a higher yield, but I have to look and actually see. I'm taking a lot more risk with that, but I necessarily don't mind it as much if I really see that there's growth there and there's stuff that's happening. And a lot of times I have my risky investments with dividends, and then I have my low risk investment dividends. I look at my low risk for dividends are the ones where the people who created their company, been around for 50 or 60 years, and I know, the company, even during a bear market or when things are going bad, they still manage to be successful, continue to keep their business going. And for me, that seems like a good investment long term. So the next income I would like to talk about is royalty income. The reason why I think royalty income is a good passive income to add is because royalty income is when you decide to create a book, maybe you're a musician, you create music, or you design an app and you want to patent that app. When you get to that point where now you can create something and you decide to patent it and you're making money from it, then you can start getting into royalty income. This is definitely something you want to look at long term when you start to build your brand. Owning your own applications, owning your own music or whatever you're into. When you own something, it allows you to make a lot more money in the long run. The next income I would advise looking at is rental income. So rental income is great for lots of reasons. If somebody, say, is looking for a place to stay, and you say, hey, you can come stay in one of my buildings here, the rent, of course, is going to be about $500 or $1,000 a month. Every month you're getting passive income from that because somebody's paying $500 to $1,000 a month. This is great for somebody who wants to get into owning property, who wants to make money in the rental side. Now, the downside about trying to get into this, though, is it normally costs a good amount of money, especially if you don't have money up front to buy your own property. This is what I would advise doing. Right now, if you can't get into real estate with investing, as far as in buying your own property, you want to get into maybe investing in dividend stocks for real estate. You can do that on Robinhood, you can do that on Fundrise, and you can figure out what the yield is, see how much money you can get for the investment. And this way, long term, you can build your wealth another way. And once you get a good amount of money and you can actually buy property in the long run, then you can look at possibly buying property and then going ahead and charging for rental income. That's the beauty, I would say, about these applications nowadays. The barrier is very low and it allows you to get in to make that type of money. But rental income was one I really wanted to let people really think about when they're deciding to build up their passive income stream with you. And we want to talk about with investing in the stock market too, you have capital gains, which is even good too. You can make money from capital gains long term, and that will increase your wealth too. Then last but not least, I want to talk about savings. So the big thing about savings is you want to make sure that you understand how to save money each month. One of the things you can do, and what my wife did, is she has 10% coming out each month for her savings. And this is a really good idea. This helps you make money and pay yourself first. So as money is going into your savings, you're making more money long term, which is a smart idea. Because now you're putting money away, you're saving, and now you have the emergency fund. You want to do about $1,000 first. Once you get to $1,000, then you want to get up to 3 months, and then you want to get up to 6 months. 6 months of income is going to help you long term be able to build a thick enough savings if something happened. Let's say in 6 months something else happened with coronavirus, and for whatever reason the market just went bare and people are getting laid off all over again. You have 6 months of income that can kind of hold you over, plus you have your unemployment. This gives you time to think, want to go back to school, start up a business. I have seen this plenty of times with entrepreneurs saying all they had was to save income and they started up a business online doing that. There's a lot of different opportunities where you can start taking control of your finances right now, but a lot of times we feel like this is just too hard. Like all these things that I'm talking about, a lot of folks just feel like, I can't do it. But you honestly can do it. You just got to take control of your life and really figure out what type of investor you're going to be long term. In my case, I'm an investor where I like dividends and I like long term investments. If I did do trading, it will more than likely be on stuff that I feel like I can make a higher stocks I can make a higher profit off of. But generally, I like to see what's going to happen long term. And my goal right now is to start up a business that's going to be passive long term. And that's where I'm doing YouTube and I'm working more on online content. You just got to figure out what you're going to be doing long term and how you're going to build your own wealth in your own business. Or if you're going to work a 9 to 5, how you're going to be trying to get some of those other stream of income. So in the next 10 to 15 years, you don't have to worry about money. You can just be relaxing and enjoying yourself. Alright guys, I hope this video was very knowledgeable. I will have a lot more content on investing and personal finance coming. I want to go a little bit more on credit cards and how credit card debt is formed, and also a little bit more in depth on emergency funds and kind of some fast ways you can get that emergency bank account up to a higher income, and you can make sure that you're taking care of yourself. All right, guys, thanks for watching my YouTube channel. I have a lot more content to come. You have a great day.